one other counter that is in focus on the back of its numbers is Updater Services. The company reported their Q4 numbers. They saw muted growth in the quarter gone by, while revenue and profit after tax increased on a year-on-year basis. Margins also came under pressure sequentially. We now have Raghunandana Tangirala, who is the chairman and managing director at the company, joining us now to discuss more. Well, good afternoon to you, sir. I'd just like to understand from you, when it comes to your growth was muted in the fourth quarter, but what about FY26? How do you look at growth in both your segments, IFM as well as BSS?
Sir, I think you're on mute. If you could unmute yourself.
Yeah, thank you. Thank you for having me.
We can hear you now. Please proceed.
Yes, the last quarter, the growth was slightly muted. But however, the full year, we did about 12% on revenue growth. But profits improved, actually. If we look at full year last year to this year, there's a 80% jump on our PAT.
Understood that, sir. So now going into FY26, in the quarter gone by in FY25, you also added Amazon as a client as far as the IFM segment is concerned. Now, going into FY26, taking into account contribution from key clients, for both of the segments, what is the kind of guidance that you will be able to provide us on the top line, on the margin, as well as on the bottom line?
Yeah, this year we have clear visibility, at least the next 2 quarters in both the segments, the BSS and the IFM segment. We'll do a clear 15% on top line and about 17 to 18% on our PAT. So that will be the guidance for the growth for FY26.
And what would the margins come around to, sir?
Whatever is the margin we have shown for this year, the PAT numbers was about, I think, 4.8% or something like that. We'd like to improve it. We would want to improve it at about 25 to 30 bips.
Sure. And in your BSS segment, in quarter 3, there were some headwinds with respect to the loss of clients in the Athena business. So has this, is this behind us? Has this improved? Where are we at right now?
Yeah, it has. There was a setback with Athena, but the overall contribution of Athena is very small. It's less than 10% for the group, even in terms of revenue, or in terms of revenue, it could be less than 6%. That you can look back. Now we have recouped. This year we should do better, but we'll still not do a 15% growth in Athena alone. We may do about single-digit growth, but overall in BSS we'll do a 15% growth.
Understood that, sir. Also want to understand, as far as the guidance is concerned for FY26, you've given a 15% growth on the top line. Does this include the 2 companies that have been merged with UDS? In that case, what would be the organic growth contribution and what will be the contribution after the merger?
These were actually grown. They were not inorganic, actually. They were companies homegrown, very small in size. Both put together should be about 100 odd crores, 150 crores. So when we say growth, it is a consolidated growth, right, including this merger. So earlier, they were reported as individual companies. Now they merged into UDS. So overall growth is a 15% on all the companies.
Sure. And, earlier on also, you've spoken about growth acceleration in your airport ground handling services. In FY25, I understand it's somewhere around 5% of your revenues. But what is the kind of growth that you're expecting out here going forward? And, what kind of mix what kind of percentage to the mix could it contribute? And, earlier on, it was also expected that this business could generate profits this year. So has that happened?
Yes, it's happened. This year, we've just about broken even. Next year, they could be about 14-15% margin business. So yes, the growth happens there at about 40% compared to last year. But that is still small. Still, it could be less than about 70 odd crores. But it becomes very profitable. So that would add to our PAT margins. So when we said the PAT margin will improve by 15%, it includes that.
Understood that, sir. Mr. Raghunandan, what we want to understand from you is, if we look at FY25, around 65% of the total top line comes in from the IFM business, and the rest of the top line growth actually comes in from the BSS business or the varied allied services that you provide. At this point of time, given the lower base, can we expect significantly higher growth coming in from the business support services part of the business? And ideally, FY26, FY27, what kind of a revenue mix are you targeting?
Largely, it could remain same, but we see an uptick in the BSS, so it could go up by about 10%. That means if their contribution was 35, they may come to close to 40%. So that is the plan, and that's what is happening.
And where do you typically enjoy higher margins? Is it at the IFM business, or is it more towards the BSS part of the business?
BSS is typically 2 to 3% more than the IFM business. IFM business in the range of 6 to 7. They are between 9 and 11.
Understood that, sir. So, the other thing what we want to understand is on ground, typically we understand that the business is run via the tendering process. So what is the kind of opportunity size that you're seeing? If you could quantify that for us in some form, what is the kind of on-ground competition you're seeing from peers? And within that, what is the kind of win rate that you typically enjoy?
See, the industry itself grows at about 10-11%. So that's what the competition is, right? So we would like to grow much higher than the industry growth. So that's where we take the space. These are not tendering per se. At least 80% of our business are not tendering because that tendering happens only in the government business, which we have less than 5% as government business. So these are actually kind of bids which we put in RFPs, then that's negotiated, and then the right to win is your capability. So that's how we get it.
Understood that. So what is the kind of, if you could quantify the prospect pipeline for us, 10 to 11% is where the industry is going. You are expecting to grow at 15%, but that also includes the BSS side of the business. So if you could quantify in terms of top line opportunity, what is it that you enjoy, and what is the kind of visibility that you're seeing for FY26 in terms of new orders coming in?
All the growth of 15% is if you take it as new orders, but probably you can discount about 2 to 3%, which would be the existing organic business also growing. But largely, it is only the new orders which comes in. So we had, I think, closed this year at about 2,700 odd crores consolidated. So we should be doing about at 15%, about 3,200 odd crores. So if we quantify the numbers, that are the numbers.
Well, thank you so much for that, sir. 15% revenue growth is what we're expecting, along with an improvement in margins. Thank you so much for taking the time and joining us. But time for a short break. Management of Gopal Snacks joins us on the other side to discuss their Q4 numbers and more, so don't go anywhere.
Hey, thank you for watching this on CNBC TV18. Hope you liked it. For more such interesting news and updates, follow CNBC TV18 on all the social media platforms.